Chapter 10, we are taking a look at the disposal of plant assets. We have TCS Company who purchased a computer on January 2nd of 2012 at a cost of $1,250. The computer is expected to have a useful life of 5 years with a residual value of $125. We are going to assume that the computer is disposed of on July 1st, 2015, and we are going to record the depreciation expense for half a year in 2015 and the disposal under each of the following assumptions. So the first thing we need to do is we need to take into account the 3 years, 2012, 13, and 14, where we recorded a full year's depreciation. Using the straight line method, we take our annual depreciation and put it into our equation, and we come up with a depreciation of $225 annually. Then taking a look at our accumulated depreciation T account, you can see I have recorded for 2012, 2013, and 2014. Because remember, with the straight line method, the annual depreciation is the same every year. Now, since in 2015 we are discarding of the computer halfway through the year, we're going to use the half year rule, and we're only going to record half a year's worth of depreciation, which is $112.50. We will proceed by debiting depreciation expense and crediting accumulated depreciation for half of the year's depreciation, which is $112.50. After recording the $112.50, our accumulated depreciation now has a balance of $787.50. That amount is important as we will need it to calculate our carrying value in order to go forward and record our transactions for discarding the computer. To discard the computer as having no value or receiving no cash, we first have to calculate our carrying value. Carrying value is calculated by taking your cost minus your accumulated depreciation. We will take $1,250 minus the balance in our accumulated depreciation from the previous slide of $787.50. That leaves us with a carrying value of $462.50. We then will put it into the equation to determine a gain or a loss. That equation is the amount of cash received minus our carrying value. In this situation, we received zero cash, so our loss is equivalent to our carrying value. To journalize the loss, we will need to debit accumulated depreciation, as currently it holds a current balance, and by disposing of the computer, we need to eliminate the computer account along with its contra asset account accumulated depreciation. We will then debit the loss on the disposal of the computer and then credit the computer account since it holds a normal debit balance, and that account is now zero. After this transaction, computer account no longer exists and the accumulated depreciation account has been closed, leaving us with a balance in our loss account. If the computer is sold for $200, we need to put it into our equation to determine gain or loss. $200, the amount of cash received, minus the $462.50, the carrying value, leaves us with a loss of $262.50. For the journal entry, we will record the amount of cash received as a debit. We will decrease our accumulated depreciation account for the balance, leaving it zero. We will debit our loss account, and we will also decrease our computer account, leaving that account at zero as well. If the computer is sold for $550, looking at our equation for gain or loss, since the amount of cash received is greater than the carrying value, we will be able to record a gain of $87.50. We will record the $550 of cash received. We will decrease our accumulated depreciation account for its balance of $787.50. And for gains, we credit our gains, so we will have a credit of $87.50, and we will decrease our computer account to zero by crediting it for its balance of $1,250.